Okay, thank you. Welcome to another episode for Sell Any Biz, a business podcast where we meet entrepreneurs and business experts around the world, merger acquisitions. My name is Tahir. Today, we're thrilled to join by a very special guest, David Green, founder of Eco8 Investments Limited from UK. David has extensive experience in M&A, having grown his company across the UK, US, and Asia with 19 associate partners. His strategic insights are invaluable for anyone looking to scale their business or invest in strategic acquisition. Welcome, David. How are you? How are you doing today? Yeah,
Good.
first of all, let me
Thanks
start
for
by
having
thanking
me.
you
Glad to be
just
here.
to take our time and being on my podcast. So we are just starting. I've started connecting with people around the world and inviting them to my show and to talk about merger acquisitions and business podcast. So, yeah, please introduce yourself to our audience and what you've done, what your past experience and achievements are, and then we'll dive into a discussion.
Awesome. Yeah, no problem. So you've just been in business my whole life, left school at 15, um, and just always felt that I could just do things that someone else didn't pay me for. I always just had that instinct in me that I could just generate for myself. And I think, like any other business owner, there's been some things that have gone spectacularly badly wrong, and to most people that's Armageddon, but to an entrepreneur, that's all part of the tapestry of what we do and how we think. And you learn incredible lessons. I like to use the phrase cheapest college ever. It doesn't always feel particularly cheap, but the knocks of hard life are fantastic, and you just pick yourself up. And obviously, along those routes, some fantastic successes come your way too. Momentum is hugely important, and that deep belief, which I've always had, that you can make things happen. And yeah, I just had business in logistics, built up, sold, retail, started, built up, sold out, um, facilities, and I kind of just morphed into M&A just because I saw an opportunity, not because I knew anything about acquisitions. I just saw an opportunity. But again, I think most entrepreneurs will have it in their mind, how hard can that be?
Exactly. Yeah.
We learn the hard way that it's really hard, and you need to have some real nuances that you just don't know about. And I think it's that old saying, you don't know what you don't know. And actually, that thinking has really put me in good stead. And I try and coach along our associate partners when they're in front of business owners and say to them, look, they don't know like we didn't know, or you have to just really hold someone's hand through a process, and so that alone has been really useful. Yeah,
Great.
but that's been my background. Just quite exciting, quite varied.
All right. So tell us about your company, Eco8 Investment. What are you focused on? Have you done any acquisitions, and where are you heading to in the M&A industry?
So we've done loads of acquisitions. We're super strategic. We are in multiple industries. We now have associate partners in the UK, the US, and in Asia. And I guess we characterize ourselves as a bit of a strategy gap that a business owner just wouldn't think of. And our sweet spot, I guess, is pivoting around a talented entrepreneur that's heading in the right direction, someone we can really get behind them and their business, what their foundations are, what they've built, and we look to put them inside a group. So their company comes inside a group, and then we look to grow them and grow the asset by acquiring businesses that make strategic sense for his or her business. And we try and avoid raising capital in the SME market, just because as investors you want to buy dollars for nickels, and that's not much fun for a sell side. And we just want a far more exciting and appealing consolidated EBIT value, asset value at the top. And naturally then, as everyone knows, you then start entering the realms of not just a far more a far greater multiple because of the swollen or expanded EBIT at group level, but actually more appealing to institutional money too.
So you have associate partners in UK, US, and Asia. So what I assume is, so in your deal flow, your associate partners in that territory, they take care of, kind of principle of that acquisition, follow it through. And so how do you structure? Do you do full acquisition, or the existing business owner remains in the business, continue doing it, or you do the management of the business as well? So how do your structure look like?
I think why we've been so successful is because we focus far more on what the business owner wants to achieve rather than having this is our playbook, take it or leave it. I think that's why our appeal, and we've grown at such a rate of knots. We like this term, add value. And so we spend a great deal of time connecting, building rapport, and really listening intently. What are you trying to achieve? Do you just need to go? Do you want to grow a bit, then go? Do you want to? Is it a bit too echoey at the top for you? So you want a bit of a kind of strategic partners that you can, and then exit in 2-3 years time. Do you want us to all exit together? We're really good at asking those questions to try and deep dive into what the business owner is trying to achieve, and then strategically work with them to figure it out.
So owner can stay, they can leave in short term, long term.
Nimble, I'd call it. We're really nimble.
And how do you fund those deals? Do you do mostly seller financing, or you have investor backing? What is your funding strategy is?
Again, we've got multiple angles and approaches, because if a business owner wants to have his asset worth more money than it currently is and increase the appeal, then actually we don't need to raise capital in those circumstances. Some equity gets placed into a holding company. We now have some equity or stake in it, but we make although they slightly dilute, they marginally dilute their asset, their retained equity will grow by association. And also we get paid a management fee or a partnership fee as well for all the work we're doing in the background. So that's one aspect. But we're working on LBOs, vendor financed, deferred. We've also raising capital institutional level. We have a pretty big playbook now,
depending on the deal,
where we can. It's a mix again, and to my earlier point, we have built it that we can literally try and establish what they're trying to achieve. Look, we can't. We do have to go to a lot of meetings. There are a lot of frogs we've got to get through. What we have to do initially is we have to establish a current asset value, and we don't. It's really difficult to do a deal with someone, and that's no different to any other investor. If someone wants far too much money, there's nothing wrong with someone wanting more than their business is worth. I think that's fair. I do think that's fair. If your business is worth $1 million, but someone says, "Well, I really would like to get to $2 million," or what's quite common in the SME market is something's worth 600,000.
Right.
That's the number we can get behind. But someone says, particularly retiring level, "I want $1 million." That I know this because I go to plenty of events. That's abhorrent to most investors, that idea. We don't say that. We say, "I don't blame you. You're going to have to work with us, though." We have to work with you. You have to work with us to grow you at acquisition, not just organic. We're not salesmen. There's plenty of opportunity to pollinate across customer bases once we acquire other companies. And then and by the time we do some financial engineering, economies of scale, pollinate across new markets, but then beyond that, the asset at group level becomes more appealing,
and I think your presence
the
in
entire
Asia,
group's worth more.
America, and
So
Europe also opens new door for that company. Probably they have cross-border opportunities for growth. That's another element which could be quite appealing for. Yeah. So exactly.
And we're experiencing that already.
Model, so you can take it to other country and. Right, great. So, so you're open in terms of industry. So you look at all different industries. So, what is your sweet spot in terms of EBITDA or revenue? What sort of companies are more appealing to you?
To be honest with you, I'm at heart, which is where I started my life back as a child. At heart, I'm a market trader. And so I want, as long as I can turn something that's at one level into a higher level, we're not overly, I tell you, that's not our principal focus is who we could be working with. So if we had someone who's a really cool person, definitely understands the transition of not just sitting there doing all the work themselves and keeping profits, gross margins super high because they're not employing anybody, but we know that they're a really good person, like us, just wants to add value, understands the concept they're going to have to change to have a sort of broader spec, but it's a really small business, niche business. That would be more appealing to us than a super-sized company whose owner is the professional in the room, the only one that anyone should. And we've walked away from big opportunities because we just saw problems further down the line with one or two characters in the C-suite level. And so we've that's our principal focus. I think, look, we talk about this a lot, actually. We tell business owners a lot. We have 3 basic rules. Do we like the entrepreneur? Do we think we can work with the business owner?
Yeah.
Do we like the business and can we add value? And I think if business owners or if entrepreneurs had those 3 simple principles, it covers so much. It covers so much of that question. Do I like it? Can I add value?
Great. And
then
in terms of your deal flow, how do you originate the deal? Do you have your in-house team? You go to work with brokers? So what's your deal flow look like?
So when I started on my own, I was using Sales Navigator and having some success. And now, just between our, I guess, brand exposure, we're getting a lot of people come to us.
Right.
We do a lot of PR. It sounds like self-promotion, but we're promoting what we're working on, what we're doing, what market inside knowledges we may have. So we do a lot of that. And I think between the various associate partners, they'll use all manner of strategies
you build your
themselves
own,
that just work for them.
Yeah. So mostly. Yeah.
We do mostly. Yeah.
You work with business
everything's
brokers?
off market. We don't. Yeah. We bought a few via brokers. We've used a few brokers, and we have bought a few. There are a few of them out there that are really cool. But I would say 95%, it could be even a bit more than that. Probably 98% of everything we've got and work on. And I have to tell you now, we probably have something like 115 or 120 live acquisition opportunities on the go right now across
which you're currently exploring
markets. And I would say 98% of them.
You're currently exploring.
Pardon?
Okay.
Yes, and working on, and they're either we've had one meeting or we're at heads of terms and everything in between. And so And probably 98% of them are all off-market opportunities that we're just engaging
that's
with
impressive.
business
I
owners.
think your presence in 3 different continents also gives you a lot of exposure in terms of what's going on the other side. And what is it different? Because every market is different. So I live in UAE and Dubai, so that's where I spent 20 years of my time. I bought companies, I sold companies here. So I'm trying to build a business brokerage, next generation business brokerage powered by AI, automation, a lot of tech. So, I mean, industry is completely different here. How the acquisitions are done, basically, the motivation of sellers is not the same motivation what is in US or UK. People are age population, baby boomers. Here, everybody's young, like, Emirates has only started building up after 90s and 2000. So, average age of a business owner is about 40, So the motivation of sellers here is to sell because they want to get, a good exit. They want to get the good money. So often we get people coming from the other side, hey, I want to do full seller financing acquisition, or I just want to do no money down acquisition. So we did try to work out, but it doesn't work here always because it's rarely, it's close to impossible to find a seller who's retiring or who's just selling a business because they don't want to continue, So so every market is different. So what are your experiences in all 3 different markets? Yeah,
it is. But the way I would approach that, if I can, so we have a little bit of that. But the way I would approach that, and there is a world next year we could have some exposure in the markets you're talking about. The way I would approach that is, again, it's not a strap line of us, but if we were to have one, this would be add value. So imagine if we had someone in the Emiratis, a young, talented entrepreneur, and we're describing the world by saying to them, look, you've got this exciting, recruitment business. Fantastic. And you look like you're doing really well. If you put some arbitrary equity in a holding company with us, plus we're going to charge you a small management fee, you currently say own 100% of your recruitment business, say doing, $2 million for argument's sake. And we protect that value. We don't want any of that value, but we do want some equity because that's how we position ourselves as the group holding company. We will then go and resource recruitment companies across our markets. And we 100%, we guarantee it because we just know this space now and we know the type of deals we can do in different industries. We will add value to what you've got by being able to introduce other recruitment businesses into. We could do payroll because payroll's so big in with temps. So we can add value to you. So although you've slightly diluted, you haven't devalued. And in fact, within a year, your remaining equity will be worth more than your 100%. And we pretty much underwrite that strategy. So that would be the approach with talented, young, upcoming entrepreneurs that are doing super well. We would exhibit how we can add value to what they're doing. And we're having those conversations in Asia at the moment with business owners. And it's a bit of an older demographic than one you're describing. But either way, we need to exhibit Asia, we can add value. And if you can't do that, then. So we're in Singapore and we are having conversations in Malaysia and Philippines.
Yeah.
So we're just learning that, to be honest with you. We've got our associate partner based in Singapore, and I probably have 2 or 3 meetings a day out there. And look, I have to say, it's a joy working. They're probably my favourite meetings of the day, if I'm being honest. So intelligent in terms of how they really rapidly grab what we're about. I guess maybe slightly uniqueness of what we're doing. So we're speaking to one particular set of partners. They've got this awesome tech AI business where it's in education. They have a model that you can franchise where you can in education where you can teach children how to code, so they can build a Lego or something and they code so it can do things. Phenomenal. And they've built it to a certain size. They need capital. We've explained our position. We're not really lenders, we are capital raisers, but I've got to get you to a size that it becomes appealing. But we've also got a tech silo growing in the US with some really cool partners that do some really cool things with the way necessarily companies can be marketed, etc. They've all met each other, and they've really, really quickly gone. So if I don't take money now, but just give you guys some equity, I'll be out, and we've kind of got a whole business plan, and they love it. They're super excited about, and they got it that quickly. The whole concept of coming in with one idea, but leaving with another, and getting it instantly. And we're finding a lot of that in Singapore, where there's such a
US. Tell
depth
us about
of grassness and intelligence.
Which
Sorry,
do you work in, and what's your takeaway in that market?
So they do different from state to state, but similar to the UK as well. It's there's lots of baby boom markets. Look, we love the service market. Anything that's sort of mechanical, electrical, we think that's an incredible opportunity because that business is awash with an older generation, and I think our strategies of growth are really built for that market, and we are making some really good progress in the tri-state area, in Texas. Any of my associate partners that listen to this, they laugh at me because when we talk about one business and I say, "Oh, is that near the other one we spoke to the other day?" He said, "Yeah, about a 9-hour drive, not far." So I said, "I don't know." I've constantly got the US map up because we probably have in the US alone north of 50 business owners where 40 or 50 business owners where, and we've not scratched the surface actually. Obviously because of the size of it, but I guess it's that economy, isn't it? You have to kiss a lot of frogs because what we do isn't for everybody. And look, if you've got this small B2C, I don't know, air conditioning company or boiler repair company is probably a better one. You just work in people's homes. You have you and say one chap working with you. You're going to earn great money, but you'll be doing all the work. You're going to be the one tying up after the fact, and you've got to show up. Otherwise, you can't raise the invoice. That doesn't have a huge after-sale value or appeal. And so it's almost impossible to borrow money against it because all the repeat business is in this guy's head, that owner's head. So we like B2B, and we had an amazing meeting only yesterday with a guy that's got an electrical business doing about $10 million in revenue, really profitable, and he wants to work for another 3 years. And perfect to put his company into a group, have him become partner of us at group level, and then we can just, in that huge demographic, just go out and resource lots of companies in that space and just pollinate.
Many people are trying to tap
great
into
business
that
model.
Service industry in US also at the same time. But I have an experience with this industry. I worked for 11 years. I sold my business in 2018. I know this industry very, very well. So I started a small cleaning company, which I grew to a very large business, 500 plus employees. And so what I think is what my observation in that industry is, it's a great opportunity, it's a great business, but I think whoever is going to win that industry in terms of M&A space, acquiring those businesses, service-based businesses, and so I think the key of this area of success is digitalization. It's building a back office setup, or or a shared resource center to supporting these companies. So you acquire a business which is traditionally managed from last 20 years, 30 years by the owner, all this Excel files or maybe QuickBook or whatever, and customer support by a couple of admin staff and stuff. So there are many roles which can be transferred back to to the main office, to the back office, shared office. So I think the key of success in this industry is that building that resource center or a back office center which can support all these acquisitions. Whoever done it greatly, digitalize it, automate it well. You acquire a business within 6 months, you take over all the back office tasks, give it to your back office, and that is a great way of tapping into that service industry. Yeah,
I couldn't agree more. But I would just add one aspect that we always have to keep our eye on. There are some significant differences in the service space for the SME market, even B2B SME market, than there is in the corporate side. There are multiple client bases that just wouldn't use the large FM companies for their work. They like the smaller business model. I mean, largely because they'll think the service is better, but also they like the idea of being a big fish in a smaller pond. Gives them a bit more control and the response time. I'd always urge on keeping the eye on we're doing exactly that and more, if you like. We're so super proactive in building groups so we can expand the appeal, as I said earlier. But you always want to try and make sure for the customer and care side that you don't lose the aesthetic of a small operator and the charm that goes with that. So you're absolutely right. It does need digitalising because the future customers of those, long beyond that we've all gone, the future customers are going to be the younger owners, and that's what they'll expect, or the younger operators. But the charm of a smaller enterprise, a smaller business, somehow you've got to keep that. And staff as well. That's also an important point. Engineers, back office staff, they don't go to the large companies because it's not for everybody. So I would urge caution on that side, just not.
I think we can have a whole
episode
on service-based business acquisition. It's a very hot space. Yeah, there's a lot of things to talk about.
I couldn't agree more.
Tell us about UK market. So, what are your thoughts in UK market? How the M&A activities are happening in UK in small business acquisition space?
Well, I think there are some lots of similarities between UK and US. I don't think that's a surprise to anybody.
Where are the opportunities in which industries do you think there are?
Age demographic
in UK. Service side, yeah, okay.
Well, obviously the service side. And again, to that point, there are many people that came out of, post World War II. Their parents came out post World War II, would have left school, done an apprenticeship. It was a great route pre sort of this digital age we live in now. So I think that remains and will do for probably about another 20 plus years, 25 years, where there's plenty of business owners that are in their 40s and older that have become a good engineer of sorts, gone out on their own and then built something exciting, and at some point they're all going to become available. I would say certainly that. But it's hard to answer that just because we are now having some success in so many different sectors, manufacturing, e-commerce. I mean, my mind's gone blank a little bit, but I'm probably leaving something out that doesn't deserve to be left out. But
Yeah.
Oh,
So your big favorite.
marketing.
Let me guess. Your big favorite is service
We have a
industry.
marketing
Any
silo.
business related service. That's what you prefer. Yeah.
Do you know what it is? It's not about why something would be my favourite is my commercial brain that doesn't ever seem to stop. I mean, the other morning at 3:30, I'm exchanging messages in Australia. There's just so much on the go at the moment. But do you know what it is? It's what is the low hanging fruit? What can you do if you acquire, whether you get gifted equity, buy equity, whether you buy the whole thing? Whilst those conversations are going on, what is the low hanging fruit? What can you look at, identify really quickly, fix that's going to just catapult some bottom line profit? And I think from what I've seen so far, that is that industry is by far the one that you can impact and affect the most. I mean, the other one that we're acquiring is we're buying a fast food franchise business. We're raising capital and we're buying a fast food franchise business. So we're super excited about that. So in advance, and again, that's how proactive and strategic we are. So in advance of completing that, we've got conversations going on in both the US and Asia with other businesses, and we're looking at strategizing. We now have a couple of funding routes as well to not just grow ours, but then grow the brand beyond. We've looked at a really successful operator in the US. They're massive. They're group structure with lots of brand names that they own, either part or all, and they're worth a lot of money. And we've just seen, well, that's not difficult to repeat what they've done.
Right.
And so we love that. Franchising is arguably the safest
totally. I couldn't
business
agree more.
available.
So, David, before we wrap up our episode, so please give us any advice to anybody who's listening to this podcast who just want to get into their business buying journey. So what would you advise them?
So initially, forgive me. Initially, I do tell people when I'm invited to talks, and I might go into people's video networking calls. I'd always urge people to figure out exactly what type of investor they want to be, and ensure that you platform that across your different spaces. LinkedIn, if you use Instagram. I'm not suggesting for one moment anyone should stay in the lane. If I stayed in my lane, I just, that would be insane. I wouldn't have had that sort of career. I guess I would. But stay, figure out what type of investor, entrepreneur, and there are multiple things you can do. You can be a consultant for equity, I mean, the list is endless of what you can be. But I would say to someone, figure that out and then platform it. Make sure you are talking about what it is you're doing, what it is you can do, because it's super important to be able to exhibit you can add value. It's so important in this space when you're talking to a business owner about taking a product they've had for, say, 30, 25 or 30 years and saying, you know what, we're going to take your business and do it better than you've done it. I mean, you might as well.
Yeah.
You might be rude, might as well swear at somebody. So you exhibit how you can add value and make sure you do what you say you're going to do.
You emphasize a lot on adding value. So it can be someone your personal skill if you're a marketer or accountant or any other skills, so which can take the load out from the business owner. So that could be a great hook for a seller to consider your offer to sell you their business if you're rallying and adding value.
Absolutely. And to my earlier point, when we started, I said we're super good at listening intently. So if your hook is you are fantastic at financial engineering, you're really you're really good at that, and you're listening, and the owner's saying, yeah, look, I've got great staff. My finance director is, like, I've had a few, he's the best one I've ever had.
Yeah.
You're wasting your time because you're trying to now hook him in on something he's already got or she's already got. So listening intently, what is that person missing? And if you can't fill that gap, you might as well just wish them well and move on to something else. And the other thing is, just finally for me, is deal flow, because this is a notoriously difficult. I'd say most people would have to speak to 100+ business owners before they can get a good deal done. I think our turnaround is something like 1 in 10, 1 in 12, but that's probably because our appeal has grown and our strength of covenant has grown, and we've now got this good social proof.
Another factor which makes it incredibly difficult now finding good deals is because there are, the trend of finding deal is growing, and there are so many people who doesn't know, how to acquire a business. They just come and then just inquire and waste a lot of time with the business owner and sellers, and that's kind of, makes it even difficult now to find deals for people who know actually how to do deals. So
we see that on the email responses from people when the partners that do email outreach, they do respond with, we get 5 of these a week. So you've got to stand out, and you've got to figure out how you stand out from. Tell your story as well when you're reaching out. A couple of our guys have great success telling their story. Not War and Peace, just a few headlines of.
Thank you, David, for sharing incredible insight for our listeners. Stay tuned for more episodes for SellAnyBiz.com podcast. We bring you the best minds in business acquisition and entrepreneurship. See you next time. And David, we're gonna definitely have another show. It wasn't enough, but I try to do my episodes not more than 40 minutes, so not to bore people, but definitely we'll get in touch one more time again. And you're welcome. Thank you.
Well, thanks for having me.
Right, David. Yeah, that was good. That was very natural. Good. So thank you. So